Hello, everyone, and thanks for bearing with me here today. So after such an insightful and a thought-provoking chat by Barak, right? And tough job I have right here in front of you. After lunch, after such a smart and interesting personality such as Barak and Maya this morning, right? I was thinking, Maya was talking about visionary thinking and dreams, right? How do we think about what we want to build in life? And then we get to hear about exponential change. And I'm like, wow, now I get to speak about one of the most frustrating aspects of people in their lives, their relationship with their finances, right? What I'm gonna say about this. Who has ever heard anyone say, like, oh, I'm super excited about paying my utilities tomorrow morning? Or, I really dream about refinancing my mortgage. No one has ever said that, right? But the word that describes the power and the potential of financial services is empowerment, right? Even though we have never heard anybody say, I am excited about paying my utilities, or I am excited about refinancing my mortgage, I think we have all heard people say, I dream about buying a new house, or I really look forward to taking my family on vacations next year. And that is somehow, wherever you look from it, it's always enabled by our relationship with finances and our relationship with our money, right? So financial services are empowering. And they are not only empowering when it comes to our personal lives and their personal dreams, but financial services enable other business models and allow for other things to happen. Again, we were hearing a lot about exponential change and things that have happened over time with humanity. Most of those, to some extent, have to do in one way or another with finances. So that's the reason why we believe digital disruption of financial services is key for enabling new business models. It is estimated that worldwide financial services represent roughly between 20 and 25% of the global GDP. However, one of the most common pain points we hear today is people complaining of either lack of access or lack of satisfaction with their financial services providers. So again, when we look at all these developments, AI, platforms, the gig economy, in order to be truly able to tap on that potential and to tap on those opportunities, we need to look at how we build and how we deliver financial services solutions. And when we talk about digital disruption, again, it's become very common to speak about digital, right? But what is digital? Digital is not only a word, and it is not only just bringing something to a screen or bringing something to a smartphone. When we speak about digital, digital is the integration of many technologies, right? And again, it is oversimplified, and this has developed over time. But how many of these terms have we heard? We talk data visualization, we talk chatbots, we talk virtual reality, blockchain. In order for this to really be helpful, it has to come together seamlessly, and it has to be delivered seamlessly to our consumers, merchants, and participants overall of the financial ecosystem. And getting back to that concept of change, right? How fast is change happening? Well, when it comes to financial services, and I want to take a specific example, when it comes to payments, change has accelerated massively over the last 10 to 12 years, right? If we were to look at payments and a payments landscape prior to 2009, we would mostly think about physical infrastructure, physical payments, cash, probably checks, credit cards, debit cards, been around for a while. There weren't many options, right? You either used one, used the other, not a lot of sophistication, and value chains highly integrated, right? Simple value chains, probably banks, traditional financial institutions, figuring things out, solving things in-house, taking long times to develop a number of solutions and get products to market. However, if we look, and I decided to make this cut in 2009, things started to change very quickly when we look at this digital landscape, right? Products started to come out, new players started to disrupt the industry, and this started to somehow come together, right? If we look at Asia Pacific, we would start thinking about super apps. We look at Europe, and we would start looking at digital banks and challenger banks disrupting the financial ecosystem. And then from a product standpoint, right? Wearables, wallets, products delivered and financial services delivered through smartphones. And this rate of change that began or that we began to see accelerate in 2009 is only here to stay, right? Again, looking to this concept of exponential change, it will only get faster. This shows what happened from 2009 forward. I'm sure if we were to double click in what has happened over the last 2 years, we would be able to pull together a similar slide to this, right? And now we begin to see when it comes to financial services, this is all coming together in Latin America, right? The opportunity to disrupt financial services in Latin America is massive. And we can attribute this to different reasons. The first one, Latin America is a massive untapped market. We're speaking about roughly 700 million people in 33 countries, right? This is obviously attractive to those VCs out there and those players looking to achieve scale. Whatever, and what we need to keep in mind is the scale's out there, but when we say 33 countries, we mean it, right? Technology is out there to help deliver the scale, but we gotta think, how do we deliver solutions locally? 33 countries imply different regulations, imply different infrastructure, imply different operational capabilities, right? So there's no secret sauce, but putting this together is not as simple as just the number would show. The second attribute that we believe makes Latin America ripe for disruption is the low levels of financial inclusion. These have been overwhelmingly discussed across chats, but I want to touch on this. Roughly 40% of the people in the region are unbanked, and 30% have access to credit products. Again, if we go back to what credit enables, credit is a key aspect to allow for development in any society. So thinking that only 1 out of every 3 people has access to credit is really limiting the potential that we have as a region, as a society, as an economy, if we think at a country level. Then, as a third attribute making this region attractive and ripe for disruption, is looking at how we manage or how people manage their economies. We're still mostly cash-based economies. Mexico, roughly 90% of transactions are still managed in cash. Brazil, 70%. Guatemala, close to Mexico, right? So when we think about cash, and we were having this conversation in a similar panel yesterday, cash is not free. Cash is costly to manage. Cash represents logistic costs. Cash is unsafe. Cash is unsecure, right? Cash is not visible. So cash is not free and it's expensive. And having so much people making all of their daily transactions in cash represents a massive opportunity for digital disruption. And when we look overall at the incumbents ecosystem across countries, we see a very incipient digital banking ecosystem. Until recently, most banks in LAC didn't have mobile apps or digital solutions, right? So there's space for new players to partner either partner with those incumbents or to come build themselves some of these solutions to drive the digital future of the economy in our markets. And this is paired up with a growing digital adoption. As Barak was saying, 7 billion out of 8 billion people have a smartphone around the world. If we bring this down to Latin America, numbers might look a little bit different, but more than 50% of Mexicans have smartphones, 70% have internet access. Brazil is WhatsApp's second biggest market with 120 million users, right? So we put all of this together. It is a very interesting mix for players trying to disrupt the market and to do things differently out there when it comes to financial services. And again, not to lose track. Why are we interested in this? Because we're trying to make people's lives better. It's not just for the sake of delivering financial services or for the sake of paying with a smile or for the sake of paying with biometrics, right? We're ultimately looking to make people's lives better. And this movement and this trend is already ongoing, right? We're still in the early days, but we are seeing encouraging signs. 2021 we received as a region 50 billion in venture capital in LAC. It might not seem as much when compared to other markets, but it represents, by Endeavor estimates, roughly the equivalent to the capital that poured into Latin America in the previous 10 years to the full technology entrepreneurial ecosystem, only in 2021. We have identified more than 2,500 fintechs in the region. And I'm proudly saying the region, because before we would say Brazil, Mexico, Colombia, but we begin to see some geographical expansion. We begin to see other dynamic entrepreneurial and innovation hubs being born in Central America, in the Andean countries. So this is truly becoming a regional movement. And then there's players gaining traction, right? Those that began earlier, and here I think Nubank is a great example. They just announced last quarter that they just reached 65 million customers, Mexico, Brazil, and Colombia, out of which 6 million, they just onboarded 6 million last quarter, and that number keeps growing, right? So people who do things right, who figure it out, have a huge potential to disrupt financial services in Latin America. And then these are numbers, right? These help bring things into perspective. But we begin to see the region embrace new technologies and adopt some of the trends that we are seeing in other parts of the world. Open banking, and it is also widely discussed, has a transformation, or the way I like to think about it, has a transformation to bring people power back on their data, right? Receive better products, receive better offering based on putting their data out there for the financial services providers. Cryptocurrency, widely discussed as well, but the very empowering technology into what one can do not only in financial services, but if we think about the blockchain, into other industries. We heard 8% of Latin Americans have already purchased crypto. So 2022 will definitely test new use cases and see this expanding, right? And then, this is a massive challenge in the region, but people are building a digital identity, right? Having access to financial services, transacting online, engaging in commerce online allows people to begin to build a digital identity, to put themselves out there and to be known. And if they are out there, again, they can receive better offerings and they can enhance their relationship with their finances. Again, these trends are out there. We begin to see them growing in the region, but there's also challenges to it, right? How do we navigate all this? How do we navigate all this innovation and this appetite within the regulatory frameworks? Where is the regulator heading? How are they thinking about this, right? And then how do we ensure this is all done in a safe and a secure environment? How do we bring the right technologies and the right capabilities for everybody to engage in a digital economy securely, right? This is a nascent ecosystem. So when we think about fraud scandals and just other people making the news out there, big hacks, big data or information hacks, this is hurting everyone. This is hurting the whole ecosystem. So we have to all take it seriously to make sure that the ecosystem is safe, particularly in these early stages. And one of the things that we see driving the adoption of these new technologies is definitely the modernization of payments and commerce. It is changing the landscape, right? And we attribute this to three main reasons. One, we see what we call the dematerialization of payments, right? Payments, again, are moving from a pure physical shape into being behind the scenes, invisible to some extent, or contactless. The way it actually comes to life is, again, contactless payments, right? I don't know how many of you get to use your card or your smartphone. Again, this is a nascent behavior in some of the countries in the region, while in others, it's being massively adopted. Second, tap on phone, making out of every device a payment device, right? Again, we've touched on the large penetration of smartphones in the region and in the countries. So what if we could make out of each smartphone a payments device, a device for payments and a device for commerce? And third, we're seeing different shapes of QRs being massively adopted as well. What we look there, or where we think is a game changer there, is making sure or finding ways for this to be standardized. The second trend is the acceleration of digital sales. E-commerce is seeing massive growth. 52 million Latin Americans bought online for the first time in 2020. And again, we can attribute this, or this was hugely powered by the pandemic, right? But we see these trends, and we see this as a positive impact because it is here to stay. The acceleration that we saw during the pandemic when it comes to the adoption and the growth of e-commerce is roughly what we expected to see over the next 5 or 6 years. And it just grew massively during 1 year, right? But think about this. Whoever started shopping online, doing their groceries or buying their groceries online, found convenience in it. And this is roughly going back. This is roughly going back, right? And then it is not only e-commerce, but m-commerce. Purchasing from the smartphone, engaging in commerce from your mobiles. 2022, for the first time, 50% of retail e-commerce sales will take place on mobile devices. So we expect 50%, again, think about it, 50% of total online sales being done through mobile devices. And then we're seeing other mechanisms and thinking differently on how we deliver financial services, right? An example of this, and this is only an example, is buy now, pay later, right? How do we offer credit at the point of sale and think different about risk, which is actually the underlying principle about buy now, pay later, right? What if we can underscore and provide credit to consumers, not thinking on just at the traditional basis on are they risky, are they in a credit bureau, but how does this transaction look like? So this is just an example on how it is important to get creative in order to open opportunities for broader segments of the population. And the third aspect that we see is critical in the modernization of payments and commerce is the advent of multi-rail solutions, right? Again, if we look back or go back in time a few years, we would think only cash, card rails, and in some places, some P2P networks, closed-loop networks for sending money to friends, probably your family, and maybe some countries with centralized account-to-account systems, right? But these are proliferating, and they are growing around the region. A success story is Pix, right? What is happening for those of you that are not familiar with Pix, which is the real-time payment system in Brazil that was put out there by the central bank. It's growing, again, exponentially, the word of the day, right? Because it is bringing value to consumers and because it was implemented successfully in a standardized way. So what we see is consumers are demanding new ways to pay and new ways to deal with their finances. Another example of this advent of multi-rail is the blockchain, right? It is also growing on its own. It has characteristics of its own that are different to card rails, to account rails, but that are also resonating with consumers. And we are all learning as we go. What we are ultimately looking for is to deliver value to consumers, to merchants, to SMEs, and to everyone engaging in a digital economy out there. And this is all very promising, right? We've seen Latin America as land of opportunity. We've heard we're gaining some traction. We've discussed some of the technologies that are being adopted out there and see how this is being enabled by increased acceptance, but growing digital commerce and by a prevalence of multi-rail, right? However, there are still some challenges that need to be tackled out there. If we take a double click into the growing startup and fintech startup ecosystem in Latin America, it is clear that most of those startups are still not profitable, right? And that has come to light massively over the last few months, once that, again, greatly explained by Barak, but we're going into a macroeconomic turmoil and investors are looking different at things, right? And we're double clicking on the drivers of the business, double clicking on the fundamentals, and making a bigger push on unit economics and profitability, right? Most of the fintech startups in the region are still not profitable. Second, massive challenge with data availability. The biggest opportunity we see out there is credit scoring. If we are able to think differently and get creative on how we score risk profile and how we give credit to people, again, the opportunity is immense. But there's not a lot of data. Again, while people are building their digital identity, how do we score them? How do we get creative? How do we use technology to actually look at those profiles from a credit standpoint? Third, product differentiation. I love it when we think, again, let's look at payments for now, right? Digital wallets, digital banks out there. A number of them go out to market early with very similar products. And it's not as easy or as fast as they would expect to grow their product portfolio. So we are beginning to see more plays of M&A or joint ventures, the development of marketplaces, just trying to partner and play with other players in the ecosystem to develop, to offer and to develop a broader product portfolio and be able to provide product differentiation, right? It is critical for those of us engaged in the infrastructure play to develop the right infrastructure that allows for technological differentiation. It is not only a matter of marketing or product benefits, but what's the underlying infrastructure enabling those products. Fourth, trust and security. And we were saying, probably many of you have read the news over the last few months. There's frequent hacks, frequent data breaches, and these are making a huge damage on this nascent ecosystem, right? When people that are not financially included or that are thinking about solving their financial needs, evaluate where they want to put their money, who they want to engage in business with, this is something that comes into play. So again, I want to emphasize the relevance of focusing on building this trust and building a safe ecosystem for everyone, right? And this is not just MasterCard or the fintechs or the banks, right? It's everyone just building the chain because the system's security is as weak as its weakest link, right? So if we think about the payments transaction and everybody who engages in a payments transaction, there's a merchant, there's an acquirer, there's an issuer, there's a number of technology providers. It just takes one to break for the full chain to fall apart, right? So we have to think this as an ecosystem and in a collaborative way. And the other challenge that I would like to highlight is international expansion. It's still not easy or as easy as we would like for entrepreneurs and fintech startups to go from one market to the other. As of today, it takes time. They gotta rethink a number of things, and we gotta build an infrastructure that looks more like a multi-country infrastructure or a regional infrastructure. How do we enable all of this potential that is being born in different markets to scale? So these are the challenges, and moving forward, we see that there's 5 trends that will accelerate financial inclusion and will continue to shape the fintech ecosystem over the next few years. One that I've touched on is cashless societies. Even though it's a vision and it's not gonna happen overnight, we believe that is the way forward, right? We will continue to push, and I think everyone engaged in this ecosystem will continue to push for cashless ecosystems. The second one is cross-border on the rise, driven by the pandemic, but also by other demographic and macroeconomic trends, mainly immigration. We're seeing just money moving from one place to the other, either through commerce or for people and businesses engaging globally, moving, again, their money from one country to the other. Bringing back the conversation to new rails, to new solutions. This is getting better, but it is still a challenge, right? So there's massive business opportunity to improve the experience on cross-border. Third, greater focus on sustainability, right? People care about where they are putting their money and what companies are doing with that money. People care about their planet. People care about making an impact. This is going to drive financial services and how we deliver financial services to consumers, to merchants, and to businesses out there. Fourth, embedded finance. How do we leverage some of those technologies we discussed, such as open banking, to be able to deliver financial services through platforms, not only through financial institutions, but through platforms, right? Think about buy now, pay later. How about providing loans out of a checkout experience? Think about mobility. How do we make payment, this is already happening, but how do we make payments seamless in a mobility experience when hailing an Uber ride or when ordering our food, right? So how do we actually leverage platforms to deliver financial services at scale? And fifth, blockchain and crypto. Already touched on this as well. How do we leverage these new rails and all the benefits that come with it to make the financial services experience more compelling for consumers, right? So all this said, what is our objective here? We think at MasterCard of ourselves as an ecosystem builder, an ecosystem developer, right? We're not just a cards company as most of us or a number of you might think about us. What we're ultimately looking to build is to offer customers and consumers choice to decide on how they want to pay while ensuring safety, simplicity, and security in every transaction, right? So how do we become that single hub in which payment methods and rails converge in order for our customers and our consumers to engage in payment transactions seamlessly? We don't want payments to be out there. We want payments to be seamless. We want payments to be an empowering experience, which is how we think about financial services. And the way we see this happening is thinking about competition and collaboration differently, right? We need to look at our ecosystem as a whole. Again, I was saying this is built of different links in the chain, and the value chain is as weak as the weakest link, right? So if we all work together to build a strong chain, if we all build together to protect our ecosystem and to develop and deliver solutions in a sustainable way, we are all going to come out stronger and with a bigger opportunity. And thinking about competition, right? I think it's coming, or it's becoming more of a word, competition, right? Competition is no longer as clear. We don't have black and white competitors, but we actually think about competition in time and spaces, right? Who are we competing with? For what and when? I think that is the new way in which we should be engaging and building our strategies as we think how we're going to build and deliver financial services. So just wrapping up, Latin America, massive opportunity and for fintechs to grow and flourish. This is already an ongoing movement. We're seeing positive signs of technology adoption. There's still challenges to work through, and we look forward to making payments as seamless as possible. But the only way to deliver this and make this happen is working as an ecosystem and thinking differently on how we actually want to bring everybody into our digital ecosystem. So really look forward to working with everyone, and thanks for stopping by.
So just pretty quickly, I think one of the biggest barriers, especially for people in our economies, is because there's a lot of that's the informal sector. So how do you bring those people who are in the informal sector, who are afraid of the government, who are afraid of, taxes, who are afraid of being tracked? How do you get them to interact with you and get on your platform?
So yeah, definitely the million-dollar question, right? And we were discussing this yesterday at a panel. Financial inclusion is not only about technology, but bringing all the variables and the equation together. So I don't think I have a straight answer for you in how to bring all the informal population. I definitely believe there's a need for better products. There's a need for trust in the ecosystem, and then getting into macro topics here. But people seeing where their money is going and how it is being delivered back if they come out of this informality, right? So I think it's definitely a complex issue. And my answer would be it's not only a technology, there's not only a technology component to the solution, but rather this needs to be solved from a broader perspective, working with governments, working with the private sector, and obviously delivering valuable and rich products to our consumers.